Stop scrolling. Silver just ripped to multi-year highs today after a dovish Fed and an industrial demand surge. In the next 10 minutes, I'll explain what happened today, why it matters for US investors, 3 realistic price scenarios for the next week, and exactly what I'd watch for before buying or selling. Disclaimer: this video is for educational and informational purposes only, not financial advice. Do your own research and consult a licensed financial advisor before making investment decisions. Past price moves do not guarantee future results. Let's dive in. The headline. Today, September 25, 2025, silver traded in the mid-$40, continuing a dramatic rally that has pushed it to levels we haven't seen in over a decade. The immediate spark was central bank policy. Investors are pricing in Fed easing, and when real interest rates fall, non-yielding metals like silver look more attractive. The price action today reflects that policy pivot, plus an inflow of investors seeking inflation protection and exposure to metals. Why the Fed matters? Here's the core. The Fed's dovish signals, including a rate cut this month and market forecasts of more easing, reduce the opportunity cost of holding precious metals. That's a driver for both gold and silver. But silver has the extra edge. It's also an industrial metal used in solar panels, electronics, and electric vehicles. So silver benefits from both safe haven flows and genuine industrial demand growth. That double role is why the move has been stronger and faster than gold recently. The price reality. Numbers matter. Silver has jumped sharply this month and recently touched fresh multi-year highs around the mid-$40 per troy ounce, with intraday prints near $44 to $45. That's a dramatic year-to-date rise and shows new investor conviction. If you want to show a chart on screen, use a daily XAG USD graph showing the sharp upward slope since mid-2025. Structural demand. Solar, EVs, electronics. Don't underestimate industrial demand. The latest industry surveys and the World Silver Survey show that photovoltaic, solar manufacturing, EV components, and electronics now account for a large and growing share of silver consumption. Solar panel manufacturing alone requires a meaningful portion of annual silver output, and as green energy rollouts accelerate, so does structural demand. That's a long-term tailwind that can sustain prices even after short-term speculative spikes. Kitco and other market commentators have highlighted that tightness, which helps explain why the rally looks durable for now. Who's buying? ETFs, funds, and retail. Flows into silver ETFs and increased retail buying are adding fuel. When price momentum builds, momentum-driven buying, including algorithmic and trend funds, can accelerate the move. If ETFs and dealer inventory remain active, that can keep a bid under the market during volatile days. Watch ETF net flows in dealer inventory updates. They're real-time signals of whether demand is transient or structural. 3 short-term scenarios. Scenario A, bull continuation. Fed keeps easing expectations alive and industrial data remains strong. Silver consolidates into the $45 to $52 range within 7 to 30 days. This is the high-probability bullish case while flows and fundamentals align. Scenario B, pullback and hold. Momentum traders take profits, causing a 6 to 12% pullback to the $38 to $42 range, where buyers step back in because of the strong medium-term demand picture. Scenario C, volatility shock. A surprising U.S. data print or stronger dollar triggers a deeper correction below $36. That's the risk scenario, possible but less likely while structural demand and Fed dovishness persist. What I'd watch next? Watch these 5 things very closely. Federal Reserve communications, minutes, and Powell speeches. If the Fed hints at more cuts, silver likely keeps running. U.S. inflation measures, PCE and CPI. They change real interest rate expectations fast. Dollar index, big drops strengthen bullion and silver. ETF flows and dealer inventory. They show real buying pressure. Industrial orders for solar and EVs. Any slowdown there would cool the rally. If you're in the US, here's a 1-minute checklist. Confirm tax rules on collectibles and precious metals. Compare dealer premiums if buying physical. Check ETF expense ratios if using funds. And don't chase a spike without an exit plan. Bottom line, Silver's rally in late September 2025 is driven by a rare combination of Fed easing, a weaker dollar, explosive green tech industrial demand, and constrained supply. That makes the move both speculative and fundamentally supported. Watch the Fed and industrial data and decide whether you're trading the momentum or investing the long-term structural story. If you found this useful, hit like, subscribe, and comment with your silver price target. I'll read the best ones in my next market update. Remember, this is educational only, not financial advice.